We're
There
excited.
we go.
We've got Geof Smith coming up with Diversified Trading Institute, who's also a sponsor today. He's been trading for over 30 years and was instrumental in developing the DTI method. These platinum experience core level classes that DTI offers took first place in SFO magazine and Trader Planet's Star Awards in the best trading courses category. So that's pretty amazing. He's going to be teaching us today, solar currency or gold, which one wins? Will the rally in solar stocks continue? Is the US dollar going to be bullish or bearish? And should we be buying gold weakness? So welcome, Geof. There he is.
Hi, Geof.
Howdy.
Have you back.
Hi, Geof.
Thank you. Thank you. How are you, Raleigh?
I'm doing great, buddy. It's good to see you.
Good seeing you. Good seeing you. Pat, how are you?
I'm doing great, Geof.
Good. So I guess I need to grab my little screen here, right?
Right.
That's right.
Let's do that. And I guess we see everything?
Yes.
You are good to go.
You look good and you sound good, buddy. Take her away.
All righty. We're going to go through a solar, a currency, and gold. And who's going to be the real winner here? And I'm going to make an assumption that the election, quote unquote, is over until otherwise said. So I'm going to be basing that off of a new administration as opposed to the old administration. So we'll go from there. Of course, there is risk in trading. Past performance not indicative of future results, and can't afford the loss. Don't take the trade. But I'm not the best typist in the world, so if you see something, let me know. I'm an engineer. I'm not an English major, so help me out with that one. Anyway, just a real quick about myself, if you don't know me. My name is Jeffrey Smith. I've been trading the market since about the mid-'80s. My father went to the School of Hard Knocks, and he wanted his two boys to have some sort of financial background, regardless of what field we went into. So he took it upon himself to teach us how to trade in the markets. He had a stockbroker, his name was Tom Busby, and asked him to kind of help him out. So we started learning how to look at stocks and futures and options back when computers really weren't all that popular. Did a lot of things via fax machines and the value line charts and all that good stuff. I went off, got a couple of degrees in engineering, was a pipeline engineer for about 10 years, but throughout the 90s, I'd wake up at 3 o'clock in the morning, trade the index futures up until about 6:30 in the morning, go to work all day, and then come back home, spend time with the family in the evening, and kind of did that for a good while. And finally, the internet started going around, so I started trading a little more on the equity and equity options throughout the day, but still trading index futures at night. In 2000, Tom Busby had asked me to come down to Mobile, Alabama and help him out and help him teach people how to trade the markets. So I packed up my family out of the panhandle of Texas and moved here and been teaching and trading ever since. So I've traded in just about every market out there, not every vehicle by any means. And it's kind of a hobby of mine, and I love the markets and I love playing in them and dabbling into new things. So anyway, I'm probably more of a commodity trader now more than anything. Still trade equity and equity options, but I do enjoy the old commodity markets. So let's talk about old solar here. It's a renewable energy. I think most people realize that. The thing is we're really getting more efficient inside of solar panels and stuff like that, which the biggest problem, I think most people wouldn't mind chunking a solar panel or several on their roof and kind of saving a little money. But the problem is the efficiencies of the panels. And not only that, you got to get them cleaned and replaced and blah, 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 blah. And so it's been very expensive to try to do that. But the technologies are actually getting a little better now for these renewable energies. And I think with, the new administration is probably going to be pushing more renewable energy kind of things. And I think you're probably going to start seeing those start to move higher and probably move higher over the long term, especially if they start, subsidizing them and things like that. Even in batteries, battery technology has picked up quite a bit. And if you kind of look at some of these, now I threw this in here, and in fact, I actually had it in my little, I don't know what that thing was a month or so ago there, Cam, or a week or two ago, but the little welcome deal. But this is a renewable ETF. So it kind of takes everything into consideration, if you will. And it's kind of been moving up here just a little bit. So this is going to be kind of a longer term play if you're wanting to get into just an ETF that you don't have to try to pick a company or anything like that. Jinko Solar is probably the world's largest solar company as far as making the wafers and the panels and stuff like that. They're based out of China. Of course, they sell their products worldwide, and they have a market cap of about $2.91 billion right now. You can kind of see they've had a nice little run up. They were 16 bucks. They went to 90. They've kind of pulled back a little bit in here as we've gotten into the election times, who's winning, who's losing, and so on and so forth. But they've kind of started settling on the $50 area. And I think if you can kind of dip back down to that $55 to $60 area, I think it's probably worth jumping into. And you can do leaps on it if you prefer to do the options. You can buy the stock. You can do spreads, whatever you want to do. But I think it's something that I would look for on a longer term basis. And probably at least the next 6 months to a year, I think it's probably going to be trying to push higher, especially if the economies start moving again. And China's economy is actually starting to roll a little bit better now. So I think you're going to continue to kind of see these things kind of move higher. SunPower is another one. Of course, it's based out of the United States. It's got 20 years on Jinko. Jinko was created back, I believe, in 2003, where SunPower is like 1985. So it's a little bit older. They sell mainly just to dealers, but they've got a market cap of 3.46 billion. And you can kind of see they haven't had the great run that Jinko has, but they have still had a decent little move here, where Jinko went up. What would that be? Somewhere around 400%. This one's gone up a good 100%. So just over the past couple of months here. So, but they're all kind of starting to spurt up a little bit. Another one to kind of look at, and I'm going to flip between PowerPoint and my software just to have fun here. But another one that you can kind of look at here is Plug. I don't know if you've seen Plug here lately. This one is more on the battery side of things as opposed to solar, but they have had a nice little run here over the past several weeks. This is a daily chart. And will probably continue to do move higher. And they've kind of broken out a little bit. They've had a nice little trend all year, really. They kind of chewed around a little bit. Of course, a lot of people got beat up in the spring. But this one's actually starting to break out a little bit, and I'm kind of liking it as well. It's not a very expensive stock. It's only 23 bucks right now. So that's one thing that I'm starting to look at is some more and more and more of the renewable solar battery companies, just as those are coming about. And I think that they're going to probably continue to do very, very well throughout the next 6 months to a year. So you'll usually, just to kind of put a pause in here just a little bit, usually you'll see when you get a new administration that everybody's all excited about it and what they're going to be doing. And the market has a tendency to have a little bit of a rally off of that. And that wouldn't surprise me one bit. But once we get to the new fiscal year around October of next year, then they get to see how all those policies are doing. And then the market gets to vote. Do we like it or not? And so they'll usually either correct the market if they don't, or they'll continue to rally it if they do. So it'll be really interesting to kind of see how the next year pans out, especially with the pandemic that we have, how they're going to be opening all that up or shutting things down. So we'll just kind of see what that does. And here's the stocks. First Solar is also in there if you want to kind of look at it. It hadn't had the move that Jinko and SunPower have, but it's one to kind of keep your eye on as well. Now, talk about a market that most people don't look at or trade, and is kind of an interesting market. Currency is, I don't know, it's a very, very vague word. I'll put it that way just because of the different currencies that are throughout the world. If you look at our US dollar, which is in theory the reserve currency in the world, It's lost 75% of its value in the past 50 years. Ever since we got off the gold standard, it's been kind of slowly just selling off. Now, they dumped off back in, what was that, 2008. They had a little rally back up, made a new, kind of went back down back in 2018, not very far. And then they kind of moved back up again. But now it's kind of rolled over and starting to push back down. The problem is we, the U.S., is the biggest debtor in the world. We have a huge debt. And with that, it's very hard to maintain our currency, if you will. Of course, the overall markets move with currencies. And I mean, think about commodities. If, corn is traded in U.S. dollars around the world, then, the more expensive our dollar, the more expensive our corn. The cheaper our dollar, the cheaper our corn. So the cheaper it is, the more people can afford it and buy it. The more expensive it is, they won't buy it. They'll find someplace else they can get it cheaper. And I thought it was kind of interesting when everybody was complaining last year, the year before, how expensive our dollar was. Our dollar is way too high, blah, 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 blah. And then you get to thinking, well, it's lost 75% of the value over the past 50 years. Is it really that expensive? So I had a kind of a hard time with that, but it was bouncing up pretty well. Another thing is there another stimulus on the way? And basically by putting out and printing out money, they're kind of liquidating our dollar, if you will. This puts more and more dollars out there, which devalues that dollar. And it's probably going to end up hurting it. So if they're going to put another stimulus out, you'll probably see the dollar push down some more just because it's getting devalued, just because of all the dollars that they're printing to put out there. So noting that, what I like doing is looking at things kind of on a big picture. This is a weekly chart, and you'll notice there's some moving averages on here. I like to look at weekly charts and daily charts and throw a 321.65 average on it. So being a weekly chart, the red line is a 3-week average. The blue line is a 21-week average, and the orange line is a 65-week average. Now, you think about 65 weeks, it's longer than a year. There's 52 weeks in a year. So it's a very, very, very long-term average. And I always like to step back and look at the whole forest instead of a couple of trees and say, okay, how is this thing looking longer term or near term or whatever it may be? So when I see things that are trading below all three averages, to me, that's very, very weak. And until it starts getting back above at least the 21-week average, it will probably remain weak. And you'll notice down over here on the right side, they've had a hard time getting back above the 94 to 95 area on the dollar index. So, and a lot of people don't watch the dollar index. They'll usually watch, the currencies or FX, or you'll see the currency futures, which is all based off the dollar. They'll usually watch those, but not very many people like watching the dollar index, which I don't know why. We use U.S. dollars here, so just we'll kind of get used to seeing it. But if you want to look at how this one's has been moving, dollar's been going down. Here's the Australian dollar, and it's been moving up as of course, the U.S. dollar has been moving down. And you'll notice it's above all three of those averages. So right now, I would be arguing that you should probably be looking at getting into, if you don't like futures, looking at the currency ETFs, such as, here's the Canadian one, FXC, but there's FXA for the Australian dollar, there's FXE for the euro, there's FXY for the yen, but there's various ones out there that I would probably be kind of scooping up a little bit, because I think the U.S. dollar is probably poised to kind of continue to move down over the longer term. It had a low back around 88 back in 2018 area that it bounced up off of. If it breaks that low, then you've got a long ways to go down from there. We could go down to the 72, 71.50 area on the dollar index, which is going to be pushing the other currencies very, very high. So I think we'll probably get a new rebound move in the global currencies higher against the US dollar. And that's why I think the FXCs, FXAs, FXEs are probably going to be a better play as opposed to trying to go between pairs in Forex between euro, yen, and stuff like that. If it's dollar based, I think it'll probably move a whole lot better. So beware of that. And of course, if you're wanting to short the dollar, UDN is the ETF for shorting the actual dollar index. Or you can just do the FX currencies, the FXA, FXE, and FXC. And there's the other ones if you'd like to do that as well. But UDN is a way to kind of play it short and see if it continues to fall and fall and fall. So, but something I've been starting to dabble into and acquiring. So gold. Now we could park in the metals markets for a good while, but we don't have a good while. So we'll go with what we have. Gold is basically the global currency. It's more of a fear contract more than anything. It is used industrially a little bit, but it's just so expensive that they don't use it. I mean, if they could make fittings in the ocean out of gold, they'd love it just because it doesn't corrode. It won't get eaten up or anything like that, but it's just too expensive to do that. So, and it's very, very soft. You can actually take, what is it? Is it one gram? No, 1 ounce. Maybe it's 1 ounce. You can actually hammer it out into like a 6x6 translucent sheet. That's how malleable it is. Pretty cool. But with the dollar weakening, you'll usually see gold pushing higher. It's traded in US dollars. So as the dollar moves down, gold will usually move higher. The global debt, as I was talking about earlier, is probably going to be helping gold to move higher as well. A lot of people are going to be looking to jump into the metals markets to preserve some of their wealth, if you will. The demand on gold has been very high over the past 10, 15 years. Back in 2003, 2004, it actually was down about 275, 280 bucks. And now we're up here at 1900 basically. So it's had a big run, but it's had some dips. But one thing that it really hasn't done ever since it's broken above the 1200 area, it's never gotten back below 1,000. So if you look at how silver's traded, silver moves a whole lot more than gold does percentage wise. Silver was almost at 50 bucks. It went down to $12. So you can see it moves a whole lot more, even though gold's kind of moving along with it. But silver is, they always call it the poor man's metal. I don't know why. The contract, the actual futures contract, is pretty expensive. So it takes a lot of margin to trade that thing. But anyway, but gold and silver, even copper, have a tendency to move together. We get more uncertainty, we'll get more positive move in gold. If people are starting to feel real comfortable in the market and how the economy is going, gold will usually sell back off. So keep your eye on how the economy is doing and things of that sort. I think one thing that gold is waiting for, as the dollar is, are they going to do another stimulus? If they do, gold will shoot up, the dollar will push down, and you'll get a new rise in gold. The big thing is how they're going to be dealing with all the debt that they're creating. That's the big thing. And the longer it stays out there, I think the longer we'll see gold trying to push higher and higher and higher. And of course, you got the old Fed. And what was really interesting about the Fed is they got out of QE, the quantitative easing, and they were just like, okay, we're going to get out of this. And they did, and gold started kind of pushing back down. And then all of a sudden, they thought, we need to lower rates again, and they're going to start doing QE again. And so they started doing that, and gold started pushing back up. So as the Fed is doing all the buying out there to keep everything buoyed up and keep interest rates really low, gold's going to continue to probably press higher. Another thing is, you think about, there's, in the end, something is going to happen. Either we're going to have really high inflation, or we're going to have another depression. And I don't think people are going to want a depression. So my guess is we'll have the inflation side instead. If you look at food prices just this year, well, and I'm going before we got into the pandemic, they started moving up. But we've had an average of about a 7% rise in food prices at the grocery store, not just in the field or futures contracts or anything like that. I'm talking about in the grocery store. You're paying more for food. I don't know if you've noticed that. I'm sure you have. But that's the thing. Things are starting to cost more. There's more dollars out there. And so we're probably kind of starting to see that, but we have to watch the GDPs and the CPIs and the PPIs and see what prices are increasing, what prices are decreasing, and see if there's actually true inflation out there or if it's still just kind of going back and forth a little bit. So gold, again, looking at a weekly chart here, you'll notice it's been in a very, very, very nice uptrend. Now, this is a monthly chart. So right now we're going back somewhere into 2019 here. So, but it's had a really, really nice trend up. It's kind of flattened out a little bit as the first stimulus got out of the way and in theory got into the economy. But now it's kind of holding back a little bit and kind of watching and waiting. It's well above its 65-week average. And so it's got a long ways to pull back if it's going to pull back. And it can still be very, very positive. So right now, the 3 period is trying to cross below that 21 period average. So it's got some weakness, but after the run that it's had, I mean, it probably does need to chill out a little bit before, getting some legs to move up again. If you look at the humongoid gold moves that we've had, throughout the past century, one thing that's really interesting is if you compare, there's been really 3 big gold moves. And if you take those percent moves, just an average of them, and throw it onto our current, let's say we're rallying here in gold. One thing that's really kind of interesting is that you could, if it does it, I'm saying it will, but you could see gold somewhere around $5,000 to $7,000 an ounce if it does the same kind of rally that they had back in the 70s and stuff like that. So it's an interesting concept, I'll put it that way. But we'll have to see what happens coming into the future and what inflation's doing and seeing what the debt is going to be happening before everybody gets excited to say, hey, this thing's going to 5,000. So, but it is a really, really neat thing. As I mentioned earlier, good old silver. Silver is an industrialized metal. So when you see manufacturing numbers come out, the ISM manufacturing index, factory orders, stuff like that, that will affect silver where it won't affect gold. So there'll be times that you'll have gold up today, but silver's down today just because some manufacturing numbers came out, or silver's way up today and gold hadn't done anything today. It'll move around more with the economic, I don't know, the manufacturing sector, I'll put it that way, then gold will be affected by CPI, GDP, whatever it may be. But they do have a tendency to move together. Silver, as far as the ETF, is a whole lot cheaper than trying to get into the GLD or gold ETF. So silver is kind of a neat, I put a gold chart on the silver chart. Look at that. See, nobody caught that. That 2 golds here. See, I make mistakes too. Let's go here. Let's do this. Is it daily? Yeah, let's go here. There we go. That looks a little better. Simple. Boom. There we go. So we'll look at it on a live chart. You'll notice the move that it made with gold, it actually had percent-wise a much bigger move here, right? If you take this 1173 and say if it moves up 100%, that puts you about $24 almost. It went to 29.91. So it had a huge rally in silver. but it has that tendency. Percent-wise, it will usually move more than gold will. But it too, as long as it stays above this 19 area, is still very, very positive. So, but silver, like I said, watch out for the manufacturing news. If the manufacturing starts moving back up and improving, you'll see silver pushing back higher, but it too is going to react to what the stimulus does and everything like that, just because it is a precious metal. So always kind of keep your eyes on those. And they're a really good gauge of inflation, but it's also a good gauge of, uncertainty as well. Another metal that I love to watch and actually trade a little bit. Where'd it go? Oh, this one. Copper. This is the red metal. This is the economic barometer for the world, if you will. And you'll notice it's had a much nicer trend up. It hasn't been near as choppy. And of course, it bottomed out back in the spring, late winter, like everything else did. But they were speculating early that the economies would start opening back up. And they kind of started doing that. And so copper has been continuing to move higher. One of the biggest users of copper is, of course, China. And with their economy opening back up, manufacturing opening back up, you've seen a lot of the red metal, if you will, being shipped there, being used. They had a little dip down, so that little red dip down right there. And that was just because some inventory numbers came out over in England, and they had a little bit more on inventory than they thought they did. And so it kind of shook it out a little bit, but that didn't last very long. They flipped it right back around and rallied it again. So, but copper is a really, really good way of kind of gauging our economy strengthening or weakening. And so I always keep copper just on the back side of my brain here is what's it doing? What's it doing? What's it doing? And I can kind of get a feel for how economies are doing. Economically, looks like things are still holding up pretty well. But copper starts breaking back below $3, so I'm going to begin to start to worry a little bit. And maybe they'll go back down and test the 285 to 280 area if they do that. But right now it's holding up quite well above $3, and that's $3 per pound. So I continue to kind of look at that. And you can play copper really easily with either JJC, which is the ETF, or FCX, which is Freeport-McMoRan. If you look at that, let's go back over here real quick. Ding. There's old Freeport-McMoRan. You can kind of see it does exactly like copper does, right? So, and it's not a very expensive stock. So as long as copper is going to be pushing higher, they're going to be doing the same thing. So if you prefer to trade an actual company stock, this one's probably the best one if you're wanting to see how copper is going to be doing. Outside of that, of course, you have GLD, or the Junior Gold Miners Index, GDXJ, silver, SLV, or SIL. But those are probably your best little stocks to kind of get into if you're wanting to trade the metals just a little bit. The metals markets will kind of catch you every now and then. You'll have a big move down just because a Fed governor said something or our Fed chairman said something and they didn't like it. So always beware of when they're talking, and kind of be a little on your toes to see if things hold up or they start, getting beat up or something like that. That's usually what will happen. And remember, the U.S. isn't the only place that has a Federal Reserve. You've got the Bank of England, the European Central Bank. You've got the central banks in China, in Japan, Australia. I mean, all over the place. So just beware that not the only one who has a central bank. Another thing is thinking about manufacturing news. We're not the only ones that have manufacturing, right? So one website here, let me do this. I'll bring a website over. There we go. One website that I like looking at for global news is investing.com. It's a cool site anyway. But if you can sign up for an account. I don't know what you want to call it, but it's free. And why I'm saying that is because you notice there's a little thing here called filters. All right. You can change that to the countries that you want to see. Now you can do that if you don't have an account with them. But every time you leave the site and come back, those filters go away. So, which kind of is irritating, in my opinion, if you use it a lot. So I actually created one, and now that my filters stay. Not only that, but I'm on Central Time, and you can change it to your time zone also, and it'll change all the times in here. So, but it does it by quote unquote currency, GBP. That's the Great British Pound. Of course, you have the Euro, EUR, USD, and you get down here toward late in the day. Here's JPY, here's China, here's Australia, New Zealand. But one thing that's really kind of neat to watch, and this is just a daily, you can look at the whole week if you want to, this week or last week, or do your own calendar. But I always like to see how the markets are trading at night, but also like to see what news are coming out at night. And you'll notice here, you got some New Zealand news around 3:30 to 3:45 Central Time. They're the first market to open around the world. And then, of course, you get into Japan, Australia, and then China and Hong Kong, and then over into the Middle East, and then Europe, and then it comes over to here. Now, everybody thinks the U.S. is the forefront of the market. However, when it comes to time, we are the last market to open and the last market to close around the world. So we're at the bottom of the totem pole when it comes to time. So the whole world gets to trade before we get to do that, and which is really cool, because by the time we get to our U.S. Open, we actually have a world of information, unintended. So we get to see how the whole world's just traded. And that's where the index futures are so nice to watch. Let me go back over to here. Close that. And we'll blow this up. This is the S&P futures based off the S&P 500 cash index. And you got to think about global markets just real quickly. I'm going to kind of make a little detour here a little bit. Our stocks are traded around the world, just like here in the United States, we can trade potash or Toyota Motors or something like that. Those are ADRs, American Depository Receipts. So we get to trade foreign stocks on our exchanges. Well, they do that with ours also. Well, we like to see how those stocks are doing, but we don't live over in Europe. We don't live in Hong Kong. Some people may, but I don't. So I'd like to see how our stocks are doing around the world. Well, the index futures give us a way of doing that because they virtually trade 24 hours a day, because our stocks trade virtually 24 hours a day around the world. So when we're closing out here in the United States, ding, 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 market's closed, great day, pat yourself on the back. What am I doing this evening? Well, I'm going to go by the store and grab some dinner and get home, cook it up, help the kids with their homework, blah, 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 blah. Hit the sack, get up the next day, and off you go. When we're getting off work, it's tomorrow across the international date line. So they're waking up and beginning their day while we're going to bed here in the United States. And that's the thing that people don't really, a lot of people really don't care about. But when it comes to the market, it's very, very important. So when we look at a day in the market, you'll notice that blue bar right there, right here. That's where we started out last night at 5 p.m. Central Time. That's when the market opened up. And notice in the Asian markets, the market sold off. See that? So throughout Asia, they had this nice big downtrend in the S&P. They started selling things off. Well, Europe wakes up and their equity markets begin trading at 2 a.m. Central Time. And so when Europe kind of got on board, they started shooting things back up again. All right. Then we had some news coming out before we got into the U.S. here. And then that blue bar right there is the U.S. morning market. So they started pushing up here a little bit, but ever since Europe closed, because they closed out at 10:30 in the morning Central Time, we've been kind of pushing things back down a little bit. So 10 minutes ago, Europe shut down, and here we are. Now, there might be some other news out there. I don't know. We're in this thing, right? So, but you get to see how the world values our stocks or values our S&P. And so when you start looking at a 24-hour market or just looking at markets in general, I always like to first start with the S&P. How are equities doing, right? And there are futures on the Dow, futures on the NASDAQ, Russell. And of course, you get to look at gold and silver and crude oil and all that stuff. And let me shrink this back up here real quickly. And that's what you see on this quote page down the left side over here. The very top ones, S&P, ES, YM, NQ, RTY, DAX is the German DAX, and the ESTX is the Euro Stocks 50, which is the 50 largest market cap companies in Europe versus the DAX, which is the largest economy in Europe, Germany. So I get to see how Europe is doing and how the largest economy in Europe is doing. So right now they're down along with us. One thing that's really interesting, the weakest index on the year is the Euro Stocks. It's still down about 8 or 9%. The Dow has been flip-flopping around a little bit, and so has the Russell flip-flopping around a little bit, trying to get above their Euro. Every time they get above it, they get back below it. But the Dow's back above it right now, and so is the Russell. So you got the S&P, the Dow, the NASDAQ, and the Russell, the U.S. indexes, positive on the year. The DAX and Euro stocks are still down on the year. Now, the DAX has gotten positive, but it went back negative again here over the past couple of days. So, but you can see how those trade around. And then below there, you got the bonds, trade 10-year and the 30-year bond and note. Then CL is crude oil. RB is gasoline, if you care about that. Then you got gold, silver, and copper. So very quickly, I've got a very, very, very quick view of how the world is basically going here and how they're treating our equities. So our indexes, and even Europe's indexes, are down. So we should be down. But you notice we have gold and silver and copper and crude up. So, which tells me what? The dollar's down and the foreign currencies are probably up, right? So you can make a lot of quick deductions very quickly just by kind of looking at that little picture. So when we start coming into, where is it? There it is. When we start coming into the next year, and how things are starting to peel, if you will, like a banana or an onion, and start to unravel, we'll start getting a much better picture on how these are going to be going. Gold could be the strongest one out of the group here. However, the currencies are going to be moving along with it if they're going to, beat up our dollar. So currencies and gold probably will perform well, but probably the renewables are going to continue to do well over the long haul as well. And that's what I think will probably be the really interesting picture to look at as we start going through the next year or two or three, and how the different laws and regulations and things like that start kind of coming out. Everybody has their own laws and regulations that they just got to do when they get into office. And with a new president, we get to see what that's going to happen and see which ones begin to move. So, and with that, that's my email address if you have any questions. How's that? Raleigh?
I like that. If you have any questions, email me. Well, once again, Geof, thank you so much for that comprehensive presentation. And if you will, that whirlwind tour around the kinds of things that you're looking at, specifically maybe, with the election and this election cycle being a catalyst going forward. And, and I just like the way you went through each one of the sectors, from the renewables to the currencies to the precious metals. My takeaway is I think you say that you see opportunities in each one of those segments. Is that a fair statement?
A very fair statement. And when you sent me the title Presidential Prophets, I got to kicking back thinking, you don't know who's going to be elected at the time that you gave it to me. Okay. Right. You have to keep that in mind. So I got to think, I was just like, but if the polls are right and everything like that, what we're probably going to be seeing is the renewables start picking back up again. I think our dollar is going to weaken up. And if that's going to happen, the currencies and gold is going to be moving higher. So, and most people don't like shorting markets.
Right.
They would prefer to buy. So I was trying to think of markets that were going to be heading higher as opposed to heading lower.
Sure.
But I did give them the UDN just in case they are. I mean, you can still, you can buy it, right?
Right.
But it's going to be going short the dollar. But I think it's a really, I think these three areas are probably going to be the best performers. Now, you can find diamonds in the rough, don't get me wrong. There's going to be some stocks that go up. There's going to be some stocks that go down. But I think these three sectors here, if you will, are probably going to be our best performers over the next 2 to 3 years.
So these would then represent, from your perspective, potentially longer term buy and hold type investments?
Absolutely. Absolutely. And remember, nothing ever goes straight up. So you're going to, and that's why I was thinking, as gold is correcting back, why not try to buy on weakness? So if you're getting dips in gold over the long term, is probably going to continue to move higher. So as it comes down, buy some more, GLD or GDXJ or whatever you want to. That's the way I look at this market. Until proven wrong, that's the way I would look at it.
So if I were to ask you then just to kind of turn around almost 180 degrees and say, okay, on a short-term basis, does that bring additional opportunities into play? For example, let me just hypothesize that if renewables are a longer-term buy and hold, do you look at fossil fuels and things of that nature as potential shorting opportunities?
Well, there's kind of the rub, all right? And let me explain that a little bit. The push is to get into renewable energies. There it is. The problem is you still own a car.
Right.
And so do I. And and it takes gasoline. So you're still going to have demand for the fossil fuels. And if the economy gets back up online, the big thing is their use right now is their use in gasoline. If they start shutting economies back down, give you stay-at-home orders and stuff like that, nobody uses gasoline. So it's going to hurt the price of crude and gasoline because there's no demand for it.
Sure.
But if things do start opening up, start doing well, I think you'll see crude and gasoline both start moving higher. And I think you'll probably see crude get back up to the $55 area, $60 area. Now, we're talking shorter term here.
Sure.
If you go out 2 or 3 years, I don't know what the picture is going to look like. It all depends on the rules, the regulations, the laws that they create. So that's where, longer term, question mark on fossil fuels. Because if they're still using them and they're still demanding them, then you're still going to have demand for them. They can perform quite well. But I think they're a little more uncertain. You'll notice, crude and gasoline has been very, very choppy here of late. Just can't see. If you just look at $40 crude, once it gets above 40, it usually runs to 42. If it gets below, it goes down to 37. Then it goes back up to 42. It's just all over the place.
Seems like it's in that range, right?
And if you're a short-term trader, hey, it's great. But if you're trying to buy something longer term, it's frustrating.
No, absolutely. No, I think that's a good point because, my takeaway there is it's very, very possible and most likely logical that over the short term, maybe 1, 2, 3 years out there, that there could be parallel growth in both industries, largely because you're not going to displace an entire industry that's dependent on fossil fuels. What you're going to see right now is fossil fuel prices are depressed because of demand. But as demand picks up, inventory is certainly there.
Right.
Economies around the world are dependent on pumping gas and oil. But you're going to see those things potentially move in parallel. We did have some people that were chiming in throughout the presentation. When you got into precious metals, of course, that's a broad basket right there.
It is.
Eric says, boy, this platinum kind of feels like a bargain here. Would you agree? It seems to be like it's fairly cheap if you peg it against the price of gold.
Yeah, I won't disagree with the comment, but buying it, I don't like to buy falling knives. I'd rather it prove to me that it can go up. It has had a very, very difficult time as the gold and the silver and the copper rally. It didn't play the same game. And comparatively, ratio wise, sure, it's a great buy, but I'd rather buy something that has a better trend than to try to guess at something else.
Sure. Sure. And once again, I mean, I really like the way that you covered the precious metals from gold, and particularly I think your comment was you look at copper as being, a bellwether for the global markets.
Absolutely. Absolutely. And that was the one thing that I was looking at, I don't know, several months ago. Copper had a lot of resistance right around the 280 area. It ran right up to it, and then they dumped it off again. Took it back down to about 245, and I was just like, well, they're not convinced yet. And finally, when it got above 280 and stayed, I was just like, now we're starting to improve. And from there, it's just kind of like you saw the chart, just kind of kept going, and kept going. And I think they're speculating, and you have to remember, these are speculators. We're speculators. They're speculating that the economies are going to continue to do well. Shipping is going to be pushing this red metal all over the place. China's opening up, big user. So is India. And as long as they continue to manufacture, they're going to be needing that copper. And just think about it. You get into batteries and stuff like that. There's a lot of demand out there.
Yeah, I was going to ask you there, what is the big demand driver for copper?
Yeah.
I mean, using wiring, obviously.
Yeah, wiring. I mean, building houses and buildings and stuff
Right.
like that. But I mean, they got to build motors, electric motors. They're all copper wound.
Copper wound, yeah.
And even in the batteries, they still use a lot of copper inside of batteries. And depending on the technology, I mean, I'm no battery technology. I'm no electrical engineer. I'm mechanical. But the technology inside of those things, I don't know if they're getting away from one metal and getting into another metal, like lithium, ion batteries and all this stuff. But I think there's still a lot of use for that in that industry.
All right. Well, once again, Geof, thank you so much. And the one thing that we need to spend a few minutes on is, why don't you tell us a little bit about DTI and the special offer that you've got?
Oh, yeah, I was just doing education, right?
Yeah.
So
how can people learn more about what you do?
Well, one thing that most people do, most people like trading options, and there are a lot of people out there interested in options. And the reason why people like options is because it's a very, very cheap way to control something. And that's what an option is. You have the right, not the obligation, to buy 100 shares of stock or buy a futures contract or whatever it may be at a specific price called a strike price. And the thing is, if I go out and buy 100 shares of Apple, it'll cost me, I don't know, $11,000 to do it. All right. And if I have a margin account, I can cut that in half, 5,500, but I can control that same 100 shares of Apple for a couple of $100 by buying an option on it.
Sure.
The thing is options are get complicated. People, their brains kind of go whir-clunk when they start trying to understand options a little bit. And what I've done is I put together this nice long, I'll call it a book. It's about 35, 45 pages. I forget how long it is. But going through A, what options are, B, how they work, and some strategies on how to use them. I don't get into things that are complicated at any time with options. I think the most complicated thing I've ever done in an option is doing an iron condor in my whole life. Usually I'm doing calls, puts. I love selling puts on equities so I can acquire the stock. That allows me to bring in money. They pay me to wait to get it.
Sure.
So I like selling puts on stock I want to buy. And once I get filled, I flip around and sell covered calls against it. So I bring in more money to see if they'll go and hit a profit target of mine. And so options are, I don't like to call them a trading vehicle, though they are. I think they're the greatest tool known to man in trading. You can take one of your worst trades, being long or short of stock or being long or short of futures contract, and actually with options, make it to where you minimize your loss or have no loss whatsoever. And that's the great thing about options. If you don't know them, that's why I made this little book. And it's a cool little book. Like I said, it's about 30, 35 pages. And I actually don't have my link on my slide. I just noticed.
You know what I'm going to do, buddy? I'm going to go ahead and just grab the screen here
there you go.
and put your, put that slide up there for you.
There you go. Do that.
There you go.
Anyway, this book we're selling it right now for $7. And if you'll just click that link, it's $7, and you'll have a nice weekend read if you want to. It's a great way of learning options, understanding options, how options work. And the one thing, and a lot of people say, well, I just don't understand, so I don't trade them. If you've ever bought insurance, any type of insurance, auto insurance, homeowners insurance, whatever, you understand options, because the insurance company sold you a policy and you bought that policy. What does the insurance company not want you to do? Exercise your policy. They want to keep your premium. So a seller of options is the insurance company. A buyer of options is, well, you, the consumer. And that's the thing about options. And what happens? It has an expiration date on it. And if you don't do anything with your insurance policy by a specific date, what happens? They keep all the money and you lost it all. And that's how options work. So if you can understand insurance somewhat, you can understand options just fine. But just remember this. You can only do two things in the market. I can buy or I can sell. Therefore, there are two types of options. One that allows you to buy, one that allows you to sell. Now, as you combine me selling calls and buying calls and selling puts and buying puts, that's where you get into all these. There's more option strategies than there are grains of sand, I think. But you can sit down with a piece of paper and say, well, this would make me long, this would make me short, this would make me long, this would make me short. And you can find out real quickly what that strategy is doing. And that's what this is. It's just a way to get you on the ground level to say, okay, I understand what options are. Now I can start going from there. There's a website that's really cool. It's called optionsplaybook.com. You can buy that book from Amazon. It costs like $70, but it's free online. Go there if you want to start checking out, option strategies and how this works and why would you do that and everything. It's a great site to go to. It's free. Go for it. But this book puts everything into one spot and actually gives you some trading strategies as well as how options work and how to get around through the options market. But I encourage you to grab onto it and learn.
Yeah, absolutely.
I even learned something earlier from Pat and Nikki here. I didn't know John F. Kennedy won a Pulitzer Prize or whatever that thing was.
And you have an option to use that again if you would like.
We're all learning things today.
No, seriously. Well, thank you for that wrap up. I mean, on the offer that you've gotten, I think that's extremely important because I think we can bridge the two things. I mean, you were talking about areas where you can focus on potentially as a result of the election, the sectors and what they might move. Mm-hmm. Options may be a way for you to take advantage of those things that are going on. And your point, Geof, is if you're not familiar with options, we're going to introduce you to options. And I know that at DTI, you guys have got some fabulous courses and things around that for people that want to enhance their education. Yes. Geof, thank you so much for your time. I know that you are a super busy guy there. So to be able to grab you here in the morning and have you spend an hour with us is a pleasure. Thank you so much for your time.
Well, thanks for having me, and it's good seeing you again.
Good seeing you too, buddy. You take care.
Thank you.
Once again, folks, Geof Smith with Diversified Trading Institute, a $7 package he's put together, that complete guide, to producing income with options, probably great 101 handbook for anybody to have. It does include one of DTI's really popular setups called the 1 hour horse race trade. And it's just going to give you all the kind of things that you need to do to prepare yourself to potentially be profitable for trading options. You can get there by going to westmarktrading.com/M11-ultimate. And so with that here, we are right on time. It's the top of the hour. And boy, it's time for a quiz.
It is. It is. We see Scott over there too. We're gonna
Hi,
do our
Scott.
quiz and then get him going. We're excited. Let's see. Gotta see the screen. We've got a $100 Amazon gift card to the first person who can answer this question correctly. So, Raleigh, what's that question?
All right.
Which president named his domestic agenda the Great Society?
Boy, we had some.
I know we were good.
We do have a winner. Okay, I'm going to mute the music here. Wait a minute, I got one more move to execute. Okay, there we go.
Had one more shimmy in you.
All
I
right.
had one more. Don't keep me hanging.
All righty. The winner is Eric G. Congratulations. You're the winner. Make sure you pop your email address in the chat or Q&A. And the answer is Lyndon B. Johnson during a speech at the University of Michigan in May 1964.
Yep, that's where he announced and laid out his vision for the Great Society.